All right. Good morning, everybody out there in webinar land. Thanks for joining us today. We're excited to bring you this installation of our ongoing webinar series where we try to help you navigate and understand the legislative environment, the regulatory environment, all things related to HR, payroll, taxes, all that good stuff. And also all of the many relief programs that have come out around COVID-19. Before we get kicked off, just a couple housekeeping measures. First off, we do record all of our webinars and host them on our website. So if you want to be able to review this content or a question pops into your head later, you can go to dominionpayroll.com. We haven't updated the button name, but it says COVID-19 resources at the top of that homepage. Hit that and it'll take you to the page where we host all of these for you to review later. We make every effort to have that up by close of business. So by 4 or 5 p.m. today should be there for you. If during the presentation today you do have any questions, we ask that you use the Q&A button that you see at the bottom of your screen. And we ask that you avoid using the chat. The reason we do that is that the chat disappears into the ether once we stop recording at the end of the presentation, and the Q&A is preserved so that folks can read those and benefit from them. I am joined today by Tracy Clark and Nick Summers. Nick is going to be handling the bulk of the presentation today. I am Kevin Wilson, always happy to be here. Without further ado, I'm going to hand the mic over to Nick, and we're going to jump into all things Form 941.
Yeah, thank you, Kevin. Thanks for the introduction.
Good thing.
Yeah, this is the webinar 941. So prepare to be informed. Let's just kick it off from the start. 941 is a quarterly report. It encompasses all things from withholding of federal income taxes from employees' paychecks based on the information from their W-4 forms. It also has withholding amounts due based on the employee's Medicare and Social Security wages and the calculation of your employer portion of the FICA taxes. And then the last part of it is the COVID-19 related issues, which is tax credits. So ERC, COBRA, etc. Where you can find the form in iSolved is if you, on the main screen, there should be on the left, a toolbar that is black with white lettering, and one of them says reporting that is highlighted here. Under there, you'll find quarterly reports, and you click on that, you'll get this screen, and it shows you the year and the quarter, which you can then find the link corresponding to the year and quarter, and it also includes the amended 941. So if you need an amendment for any reasons, those will also show up there when the tax department uploads them. All right, this is very important. Making sure that the address is the correct address. If you have a change of address or any kind of name change to the business, it needs to get reported to us. We can change it, or you can just report it to the IRS and let them know the correct address or name. If it's not correct, or there's any kind of deviation of what it really is, the IRS won't process it, and they will usually charge interest and penalty for unprocessed forms. And that's always not good. All right, so let's get into it. Part 1 of the 941 is 1 through 6, lines 1 through 6. So line 1 is the number of employees who were paid during the quarter. This includes employees who receive wages and tips and other compensation. Pretty straightforward. Line 2 is similar, is the total taxable compensation paid to these employees during the quarter. This is the same amount that would be included on the W-2 form of the quarter. Line 3 is the total federal income withheld from the employee compensation during the quarter, including wages, tips, fringe benefits, supplemental unemployment compensation benefits. On line 4, there's a box to check, and this is only checked if no employee compensation was subject to Social Security or Medicare tax. It's really unusual if this happens, so but just make note of that. All right, line 5, we're going to do each subcategory because there's A through F. So the total taxable Social Security wages. This is the column 1 right here on line 5A. In column 2, the wages are multiplied by the amount that corresponds. It's the, I guess, 0.124 amount. Qualified sick and family leave wages will appear in column 1. And for column 2, the amount is multiplied by 0.62. This is for line 5A. There's 2 lines 5A, but there's different. This is for sick leave wages. They aren't subject to employer portion of Social Security tax. Only need to be multiplied, those wages, by 6.2%. The same process is applied for tips on line 5B right here, but just a different multiplier. It's pretty straightforward. Just make sure that you calculate the appropriate amount by the corresponding multiplier. Ooh, sorry about that. For line 5C, taxable Medicare wages and tips. This does not have a wage base. However, any additional of 0.9 for the Medicare tax must be withheld once an employee meets one of the following thresholds. The thresholds are single with an annual income of $200,000 or more, married filing jointly with an annual income of $250,000 or more, or married filing separately with an annual income of $125,000 or more. If applicable, the additional 0.9% will appear on line 5D. So that's the line below, right here. By multiplying the taxable wages and tips subject to additional Medicare tax withholding of 0.009. So for 2021, this is updated because it changes each year usually. For 2021, the Social Security wage base is $142,800. An employee's annual income is no longer subject to Social Security tax after the earn above the wage base. No wages above the wage base on lines 5A to 5D, including lines 5A1 and 5A2, which is both of these here, will be included. All right, so that pretty much totals up all of line 5A. This is a breakdown of what is on those lines for 5A through 5F. This will be available to you when we upload the webinar. Don't think that you have to memorize this for your knowledge, but it'll be uploaded and you can read through it if you need a better understanding of what is captured in those lines. All right. Let me just, I don't think I went over line 5F, so let's do that. Section 321Q, notice and demand. So line 5F is specifically for documenting tax due on unreported tips. The IRS may issue a section 3521Q notice on demand in employers. This notice tells you about the amount of tips received by employees that were unreported. So examples are employees failed to report tips or unreported tips to their employer. This is probably familiar with restaurants and such where tips are a large percentage of the pay. If you receive a notice and sent to us, we will do with it what needs to be done with it. We handle a lot of restaurants and we do the payroll and taxes for a lot of restaurants, so we're familiar with this line. All right, line 6 is the total wages before adjustments, and this is the total of all taxes determined from line 3 5E and 5F if it is applicable, of course. All right. So like I said, this is just all the verbiage that we're going over, and we'll move on to line 7, the current quarter's adjustment for fractions and cents. And this is important just to pretty much balance everything. Line 7 is where all these pennies discrepancies are reported. So say you're paid $5,500.14. Your form states you should pay $5,500.16. You would put -2 cents. Emphasis on the -2 cents. It needs to be reported like that with the negative sign, not parentheses, just to show the discrepancy. So it adds up. The fractions of cents adjusted either positive or negative. Just to reiterate, not in parentheses, just use the negative sign. Line 8 is the current quarter adjustments for sick pay. If you're a third party sick payer, such as an insurance company that transfers the liability from the employer share of Social Security and Medicare taxes to you. Calculate third party sick pay. It's calculated for a quarter and is reflected here on line 8 as a negative. So it'll show up right here. Line 9 is recording the adjustments for tips and group term life insurance. On line 9, a negative amount will be entered, and it's any uncollected employee share of Social Security and Medicare taxes on tips, and also the uncollected employee share of Social Security and Medicare taxes on group life insurance premiums paid for the former employees. Line 9 will be blank if you do not have any uncollected taxes for tips, obviously, or group term life insurance. On line 10, the total taxes after your adjustments, if applicable, for lines 6 through 9 are entered. So if you go back, obviously it's not showing on here, but the 6, which was the total of all taxes before the adjustments, will be added up and put there on line 10. Line 11 is specifically for a payroll tax credit for increasing research activities. If this credit applies to you, you will see the amount of credit from the form 8974 on line 12. That'll show up later. Obviously, line 12 isn't here, but it'll be on one of the future slides and we can chase ourselves back. You must also attach form 8974 if it applies. Qualified small businesses payroll taxes for including research activities to 941 forms. Line 11B is the non-refundable portion of the credit for qualified sick and family leave wages for leave taken before April 1st, 2021. This would apply in the situation where the leave was taken at the end of quarter 1, but not paid until quarter 2 to the regular course of payroll period. Not for an adjustment to be made though. The non-refundable portion corresponds to the employer's portion of Social Security taxes. All right, on line 11C, sorry about that, non-refundable portion of the employee retention credit is the ERC. So it is 70% of the qualified wages you pay to the employees in that quarter. For 2021, it resets every quarter. So it's 70% of the qualified wages up to $10,000. So the non-refundable portion is limited to employers' share of Social Security. And this is the verbiage. All right, on to 11D. It is the total non-refundable portion of credit for qualified sick and family leave wages for leave taken after March 31st. So the other one was before April 1st, and this one's after March 31st of 2021. Again, the non-refundable portion is limited to the employer's share of Social Security. Line 11E is the non-refundable portion of COBRA premiums. This is also COVID-related credits that have been put in place, similar to the employee retention credit. But is the credit for the COBRA premiums assistance that are provided during the quarter, if it's applicable, if that is applicable to you. The non-refundable portion is applied to the employer's share of Medicare. On line 11F is the list of number of individuals you provided COBRA premium assistance during the quarter. So it's just the amount.
Hey, Nick.
Hey.
Also, I wanted to point out too that if someone wants to use the COBRA credits, that if they write into us to customer service, that we're going to ask for that information. We'll ask you for the amount of premiums that you paid. We'll also ask for the administrative fees, the month that you paid those credits in, and the number of individuals. And so that's why we need all that information when someone contacts us, so that we can put it into iSolved and you can get your tax credits, but also so that it's reflected correctly on that 941. So
Correct.
I know some people are like, why do you need to know how many people? Why do you need to know this, that, and the other?
Yeah.
We're really trying to follow what the IRS is asking us to do.
Right.
Same for the ERC,
right.
and for the, for the FFCRA family leave. We're just trying to get all those things reported correctly in our system so that it's reflected correctly on your 941. And that's why we want people to, go into the system, look at your 941 and look at these different numbers that correspond to the 11D and the 11E. But we just want you to understand what that non-refundable portion corresponds to. So when you're looking at your credits, you want to add the non-refundable and the refundable together to see what the credit is overall. That's the only difference between those two, is that's how the IRS tells us we have to report those credits as non-refundable or refundable.
Right.
Sorry to barge in there. I just wanted
that's
to.
fine. That's a good point, because I feel like with a lot of clients that I'm talking with about ERC, sometimes they're like, well, why do you need all of this information? And it's because we want to cover the tracks, and we don't want the IRS to come back next year or 2 years or 3 years down the line and say, let's do an audit on your ERC that you received in 2020 or 2021, just because it can't overlap with PPP, and there's a lot of rules about what is applied and whose wages get included. So we just want to make sure that all bases are covered when we give over those credits.
Absolutely. And, we keep a record of that stuff. So if they were audited, we can pull that stuff back out and say, okay, here it is. This is where you sent us all your information. And that's something that our clients can use in that audit to say, hey, this is when I used PPP. This is when I used ERC. Here it is reported on my 941 or my 941 amended. So anyway, I just wanted to just chime in there a little bit.
Yeah.
All right.
And you can still earn the COBRA credits for prior quarters. That is, I know we went over ERC a couple of weeks ago, and we talked about prior quarters being amended. It's the same for COBRA premiums. You can.
And COBRA is only good until the 30th of September. So that's the last time you can actually claim those COBRA credits. Just remember, ERC goes all the way through the end of the year, and the FFCRA, which is your sick and family leave wages, that also ends on the September 30th. So a lot of things are going to be coming to an end here in the next 2 months, with the exception of ERC. As far as I know, there could be some more programs on the horizon. I think I saw yesterday that some more money is being allocated for restaurants. But I'm actually going to tap on Kevin to look up that stuff and get back to us later.
Gotcha.
He's our restaurant man.
I show up and I get homework assignments.
Yeah, on air.
Can't say no to those.
Right.
True.
All right. Thanks, Nick.
Yeah, no problem. All right, I think I left off on line 11F. So let's just head on down to 11G. is a total of all the non-refundable credits. So it's the addition of lines 11A, 11B, 11C, 11D, and 11E. All right, on to 12. Tax, the total tax after adjustments. So it's basically the value is determined by subtracting lines 11G from line 10. And yes, it does say that right there, but it's important to follow the instructions step by step so that it doesn't get messed up, because that is easy. All right, line 13A is the total tax deposits for the quarter. 13B is reserved for the future use and should be blank.
And that total tax deposits is what that could be a zero if you had credits from the very get-go, and those credits were going towards your tax deposits. That number could be zero. That's just going to be the amount that we collected from you and was sent into the IRS. So we just have to know what you've already paid, because we don't want you to overpay.
Correct. All right, I think that wraps it up for this slide. We'll head on to 13H. And this is just all the verbiage that we went over. And you can access this after we upload the webinar to the link that Kevin referenced before. I think it's COVID-19 info on the website. All right. So 13H is the total advancements received from the filing of a 7200 form. And this is an interesting form. So it's a COVID-related issue. And early on, when this started to, I guess the credit started to come about, they offered this 7200 form, which is advanced payments. And it worked out fantastic for a short amount of time, a couple of months there. And then the IRS, they said that they weren't filing them and pretty much just treated the credits as if they would be recorded on the 941. So I just want to put that out there, that you can still use this, but we are kind of pushing away from it because the IRS has told us that they got such a huge influx of forms, both 941 with credits and 7200 with credits, that they're doing it, they're putting it all into one basket and trying to get it completed and processed as quickly as possible.
I will say too, on that 7200, a lot of people that write into us feel like in order to get their refund, they have to use that 7200, and you do not have to use that 7200. You can get your refund from this 941. And also, if you are doing an amended, you don't use the 7200 is not even an option. So that you just have to take that off the table. Now, we'll say too, we associate the 7200 with the ERC credits, but it's actually a form that can be used for any credits. It could be your sick leave credits, it could be your COBRA credits, but really we are strongly advising against it just because of the nature of the beast. It just seemed to, as Nick said, get really bogged down in the weeds, and then they were sending out notices to our clients saying, we're not, if you've processed the 941, you will not be receiving your advance credits. Well, obviously it's not an advance credit once the 941 has been processed. So we just kind of, to make things cleaner, we think it's best if you go ahead and just let things roll into your 941.
Yeah, because right now they're treating it as if it were just that, as if it was just on your 941 and you check the box, send as a refund, because that's what we do now. We just write the amount of credit and then send as a refund for prior quarters, of course. And it comes to you, check in the mail. It's simple as that. But with the huge influx, it's delayed a few weeks. And yeah, so 7200, use caution. All right, line 13I. It's the total deposits and refundable credits less the advances. So it's more than line 12. The difference is displayed on line 15, which you'll see on the bottom there. System default is to send as a refund. If you want to have it applied to the next return, that is an option. It'll just roll over, but the default is to send a refund.
Our system doesn't have a way of rolling it over. We looked into it, and it just didn't work for us. So we just don't have a way of doing that. So for us, it's definitely going to be a refund.
Okay. Okay, that's good to know. So scratch that. Forget what I say. Here's the verbiage. Right, line 16. This is the start of part 2. So I know that was a lot. Deep breath. We're going to get some more. Line 16. There we go. If line 12 on your form of 941 was less than $2,500, or line 12 on your previous quarter's return was less than $2,500, and you didn't incur $100,000 next day deposit obligation during the current quarter, you will see the first box checked. So right here. If you were a monthly depositor for the entire quarter, you will see an X on the second box along with the tax liability for months 1, 2, and 3 right here. As the total liability of the quarter will equal on line 12. And the third box, we checked if you were a semi weekly depositor during any part of the quarter. All right. Here's what I said. Here's part 3. So this is the rest. This is the last part of it there. Line 17s through 28. And this is if your business closed or stopped paying wages during a period. So right above part 3, you will see the EIN printed. This is right up here, top right. And this is the box to be checked. DP client would need to let us know along with the final date the wages were paid. And that's very important so that it's not, it's pretty much just covering bases. If it's wrong, then, and it's audited for some reason or checked or something like that, and it's wrong, then we'll have to go back and figure out what the correct date was to the day. All right, line 17 asks whether a business was closed or stopped during wages or stop paying wages during the quarter. For this box, you just put the date right here. All right. Line 18A is the seasonal employees. Employers don't file a 941 every quarter. So that's for seasonal employees or employers. Sorry about that. Line 18B is for quarter 3 and 4 only. This is for the new businesses that started after February 15th of 2020. Basically, the ARPA Act, they put out something for new businesses so that they can receive credit if they opened after February 15th. And it's only for quarters 3 and 4. And I believe it's a max for the year for quarters 3 and 4 combined. It's a max of $100,000 in credit. So that's $50,000 per quarter. And the way I understand it, the IRS has not put out a whole bunch of verbiage about it on their website, but the way I understand it, it's treated pretty much the exact same as receiving employee retention credit for the normal circumstances, except now you have a cap for each quarter at $50,000. Tracy, have you read anything different that may vary? I know there's
No.
Okay.
And if somebody actually thinks that might be an option for them, go ahead and contact us and we'll try to help you weed through what you need to do.
Yep.
But again, it's a great opportunity for anybody who started in 2020, and God bless you if you did start in 2020. Gosh, that was especially after February 15th, that was tough. But some things were already in motion.
Yep.
It wasn't like, if you were getting a restaurant ready and you started up, getting
Yep.
everything up and going early, I don't know, or late 2019. I mean, you were sort of on a roller coaster at that point. It wasn't like you could say, excuse me, I need to stop and get off because we're having COVID.
Right.
So, this would be a way to help you recover some of that.
Right. And a big reason for this program is because we compare the wages of the quarter that we're applying the ERC to the same quarter of 2019. So if you started in 2020, you can't go back to 2019 and compare wages. So we need something. This is sort of a benchmark to help out those companies. There are a few.
I think the same was true about PPP. They couldn't get PPP because a lot of that went on the 2019 stuff. So they were kind of left out of a lot of programs as a result of that. So.
Right. All right. So that was line 18B. Line 19 and 20 are for the qualified health plan expenses allocated to qualified ESIC and EFMLA wages for leave taken before April 1st of 2021. So that's here and here. Line 21 is the qualified wages for employee retention credit. So this is the ERC program that we've been talking about. This is just qualified wages that will go on this line. Can't exceed $10,000 per employee. So it's just the wages, not the credit. It's just the wages that qualify for there. Line 22 is the qualified health plan expenses from the ERC program. So that is the, if that's applicable to you, not everyone that receives the employee retention credit will have credit on that line. Or I guess health plan expenses on that line. It might just be a zero, but that's where that would show up. Line 23 and 24 are for the qualified ESIC wages and health plan expenses for leave taken after March 31st, 2021. And line 25 is for any collectively bargained benefit pension plan and or into apprenticeship program contributions allocatable to qualified sick leave wages for the leave taken after March 31st. So a lot of dates to keep in mind, and this will all be available to you. You don't have to go looking up what the dates were. I promise you, we'll put it all up on the website. On line 26 and 27, those are the qualified family leave wages and health plan expenses for leave taken after March 3rd, 2021. And line 28, last but not least, is for any collectively bargained benefit pension plan and or apprenticeship program contributions allocatable to qualified sick leave that has been taken after 3/31. So that's March 31st of 2021. Sure, there's got to be questions in here. So this is the verbiage. You can read through that. There we get the time, or want to know more about it. This is the last part 4. This is basically our info so that we are designated as a third party and we can file for you. This is very important. Just make sure that we are the third party designee so that the IRS doesn't say, hey, you can't do that. But that pretty much wraps it up. Other than this, which is similar, it's the employee copy, just pretty much for your understanding to see. It'll be different than what the IRS sees, but I mean not by much. Pretty much the only difference would be, you'd say employer copy here, but it would have the same date and all that. I can't see if there's any questions. Is there any questions so far?
Nope, there aren't any.
All right. Well,
You did a great job.
I appreciate that.
Yeah.
Just a lot of info here. 40
It
minutes,
is a lot.
jam packed.
Yeah, but I think it's, it is important for people to be able to know where to go on their 941 if they want to see what their credits are for different things. And
Right.
the 941 has morphed with all of the CARES and the ARPA credits that have come out in the last year. Well, now
Yeah.
it's a year and a quarter.
I'd say almost doubled. I mean,
Yeah,
there's
you're right. I think it was a one pager and now it's like 3.
yeah, pretty much line 17 to 28 is for COVID related or credit related issues. And it's,
Yeah.
it's a lot to
All right.
understand.
Well, great job. And thanks for joining us today. And thank you, Kevin, for being the hostess with the mostest.
You
Yes,
got it.
appreciate it.
I'm always here for you.
All right. Stay tuned for our next webinars. I'm not sure what we have on the horizon, but if you have any questions, you want to go ahead and submit those to questions@dominionpayroll.com. We'll be glad to research them and or get back to you what we know about anything tax related or COBRA or ARPA or CARES.
Yep.
So yeah. And this will be up on our website by probably close of business today.
Yeah.
All right. Y'all have a good afternoon.
Okay. Thanks, Kevin.
Thank you,
Thanks, Nick.
Kevin. Thank you.
Bye, everybody.